It is really my pleasure to be with you and kind of catch you up on some of the things that are taking place out here in the market, give you an update on some of the data that we talked about last year, and then I've rolled up some new data that I think a lot of your producers in the room are really going to be interested in, and when you're sitting here and evaluating how this marketplace has changed. I've been looking at data, analyzing data, involved in markets since 1980 when I first went to work at CattleFax. And to see where we are today in this room, I'm just going to tell you, you can't take this for granted. For those of you that are young folks in this room, I'm going to show you some data of what we went through in the 1980s and the 1990s. This industry was flailing. We had no direction. We had zero connectivity with the customer. So what we're seeing here today is really unprecedented. So don't take it for granted. I'm going to show you some data I think you're going to enjoy. Before we go through and we get into the detail, I wanted to spend a few minutes with you talking about where we are here in this cattle market. I know you all have got a lot of questions on where things are there. If I look at this data, there we're going to get the clicker working. This is where we are with the nation's cow herd. And I wanted to give you a little bit of background and perspective on this. Since the cattle herd peak in the mid-1970s, you can see as we've gone through each of these cattle cycles, every one of these ups and downs, what do we experience here? Every high is lower, isn't it? When we go through this, every one of these growth curves that we've been through in the cycle has been lower. Again, you think about the consumers, you hear what we just listened to here in these last presentations. This is something we really need to be worried about as producers, isn't it? Again, it really comes back to profitability. Is there enough profitability in this community, in our agriculture community, that we can actually stop this trend? Now, on January 1 of 2025, we're going to get an inventory report out here in about 30 days from the USDA. I believe that'll be the low in beef cow numbers that we see in this cattle cycle. So we are at the low, but we are still at a very slow growth phase. Again, I think we'll only be up about 1% when we look at this data a year from now. And you can see I've got a forecast for the next several years in here. We have a growing cow herd that we're expecting here over the next 3 to 4 years. It takes two basic things to grow the cow herd. One is profitability and one is rain. We've had some profitability now the last couple of years, but the weather cycle has still been somewhat difficult for us. So again, we're still in a La Nina weather pattern, and that's going to hold people back, I think, from what I would call a real aggressive expansion phase. But we will see numbers rebound. I think this will be a more positive situation. But as a result of what you see here, obviously, we're going to continue to see some smaller numbers in here over the course of the next few years. From the time you see the low in the cow herd, the low in beef production doesn't occur until 12 to 24 months later. So just keep that in mind. Now, we have been making cattle bigger. Why? Because these cattle, look at the genetics we have to deal with. Incredible genetics, isn't it? I mean, these cattle are powerful. The genetic selections that we make, we can add a lot of weight. We've had one of the widest spreads in here in 2024 and 2025 when we look at the price of fed cattle versus what it costs to put on a pound of gain. Again, we've only seen spreads like this 4 times since 1975. So we're going to make cattle better. We're going to feed cattle longer. We're going to make them bigger. These increased carcass weights, this is the single largest increase in carcass weights that we've seen on an annual basis going all the way back to 1980. So again, I think that tells the story, but we're adding a lot of productivity on a per head basis. We just don't have more animals, do we? So the bottom line, I think, as you go through and you look at this data is when you look at these production numbers here, obviously our production's changed dramatically, hasn't it? Look at this change in here if I take you back in here to 1980. where the beef production was in the United States. I just showed you that we had the biggest cow herd in 1975. Look where our production was in 1980. We've got 45 million fewer cattle in our inventory today. 45 million fewer cattle, total cattle, not cows, total cattle than we had in 1975. And yet our beef production over the course of the last 2 or 3 years has been record large. Congratulations to each and every one of you. You're weaning a higher percent live calf crop. We're putting more pounds on them. Our animal husbandry, our nutrition, our animal health programs, all of these things are having an impact on this data. Don't take that for granted. Some of the things that Warren was talking about a little bit earlier on the protocols, the things, the hurdles that you're each trying to do have an impact on this. And again, that's what drives more profitability back to each and every one of our businesses. But you can see these production numbers are still going to tighten up in here further in 2025 and again in 2026. So supplies are going to get tighter. What are you seeing in fed cattle prices today? Fed cattle, depending on the region, bringing $2 to $2.03. Isn't that crazy? Huh? I think most of us in the room, we were expecting we were going to see fed cattle prices trade up in here 205 to 210 in here this spring. I didn't think we'd see it the first 2 weeks of the year. So the markets have been the demand that we're experiencing in here is absolutely phenomenal. And we'll get into that demand data here in a little more detail here in the next few minutes. Let me give you a quick summary of where we are here in 2025. If we come back in here and you think about fed slaughter, we think we'll be down 700,000 head this year. That's a significant decline. There will be another decline yet in 2026 in fed slaughter. I think 2026 will likely be the low in fed slaughter. Non-fed slaughter, that's cow and bull slaughter. It was down 1 million head in 2024. 1 million head. So those of you producers in the room, think about the value of a salvage cow or a salvage bull. You understand why they brought so much money. 90% lean was trading from $3.50 to $3.80 in here through the summer and fall. And it had a little pullback in here in the fall, and now it's on the run again. What percentage of beef we consume in the United States is in the form of ground beef? What percent? Over half. Over half is in the form of ground beef. We all get the focus on the ribs and the loins and what these steaks are, but don't forget that ground beef is a staple in people's diets. That is a staple in high quality ground beef. When I went to school back in the late 70s and early 80s, we thought ground beef was a commodity item. Is it anything but that? I mean, we have seen branded ground beef programs that have had tremendous success in what we've been able to see in these markets over time. So that's been a big deal. And again, ground beef prices are going to stay stout. The reason I want to focus on this for a few minutes with you is remember, where does the beef industry have to compete with pork and poultry? Pork and poultry can't compete with the beef industry when it comes to the rib and loin. Where we have to compete with them day in and day out is with the ground beef and with our end meats. And you want to see demand growth? We have definitely seen that demand growth, even in those what we call end meats and grinds here over the course of the last couple of years. So again, what we're seeing in here across the whole space has been pretty phenomenal, unprecedented. I'm going to show you the data here in a few minutes. Beef demand is at the second highest level in 37 years. Did that happen by accident? Or was it intentional? Was it intentional with the decision that each and every one of you are making in this room? Pretty impressive. So you go back and you think about where we are. These production numbers, as I mentioned earlier, they're going to decline. We're going to be down a couple of percent this year. I think you should expect that they'll be down a couple of percent next year. So these price levels are going to stay pretty strong in here. For those of you who are sitting out here trying to plan your production here, the number of animals you're going to keep in your systems, obviously Mother Nature will have an impact on that with weather patterns, et cetera. But we're going to have pretty strong markets in here for another few years anyway. Now, from a pricing standpoint, I thought I'd just share this with you all so you could just see kind of the shape of it. I want you all to go back with me in the spring of 2020. We all remember COVID, backlogged the system. The fed cattle market bottomed first week in July 2020, 95 cents. We're selling cattle, as I mentioned earlier, at $2 or $2.05 today. Calf market was the value of a 550-pound calf in the United States was $1.55 in 2020. $3.30, $3.40, $3.50, depending on the region of the country today. So most of the cyclical price increase is in place. Most of that cyclical price increase that you'd expect is in place, but again, you can see where we expect these prices are going to be this year. There's going to be a lot of volatility around these ranges. When you get prices at these levels, remember, you shouldn't be surprised to see a $30 swing in the value of fed cattle from the highs to the lows this year. I think it'll be bigger than that this year. We could easily see a $40 to $50 range in the value of calf prices from highs to lows as we come through this year. So this is a time period in here that we do need to stay focused, and I think you need to be managing some of the risk in here associated with this. The beef market has really been interesting as you come through this over time. When I started back in the early 1980s, the beef industry had this vision. I'm not sure we had a vision, quite frankly. Honestly, I know we didn't. We were all just doing what we wanted to do. We were raising cattle. It was not with a focus. We didn't have a consumer in mind. Okay? It was what we each and every one wanted to do as our role in the industry. Obviously, you look at this decline in per capita beef consumption over time, you go back in here to the left side of this graph, this is where things actually started to turn. Back in the early 1980s, the beef industry thought it could win share of stomach and share of wallet. And it nearly broke everybody. It nearly broke everybody because you're not going to compete with with poultry from that cost of production standpoint. So again, I think if you go back and you look at this, our per capita supplies are going to tighten up some here as we go through this next few years. Now, pork and poultry numbers are still increasing, aren't they? So we're going to see strong pork and poultry supplies here in this next year. They will stay strong. Again, there is going to be competition out here. And I think the thing that I want you to see in here is you look at this data, this is what red meat and poultry consumption looked like in the last cattle cycle. So you see that big V in the middle of this chart? Back in 2014 and 15, we didn't have any, it was a bull market in beef, it was a bull market in pork and in poultry. We had record prices for all of those proteins. Look at the difference of where we are in this cycle. Again, consumers are going to have choices. They didn't have choices back in 14 and 15 because of all the dynamics that took place there. I think this is actually friendly. I think this is friendly that we don't price ourselves so far out of the market and do a tremendous amount of demand damage. Okay? I mean, we can get too high, can't we? We can get too high. I think we're at levels in here right now where we're getting along all right. Price levels of calves, price levels of fed cattle, all those things I think are about as high as they need to be. Now look at this chart in here. This is giving you a sense and feel of where we are from a per capita red meat and poultry consumption. Look at the red line on poultry. We're going to consume 102 pounds of broilers this year. 102 pounds per person. Look where the beef industry is. You see that number here? We're about 57 pounds. Pork's at 50. Most important, look at this. I just showed you consumption. Look at spending. Look at spending. This is how the consumer values it. Look at the increase in spending that we've seen, or per capita spending across this space. We've gone from getting 40% nearly to 50%. It's incredible. This is the demand growth that I'm talking about that's happening within the industry. We're winning share of wallet. Why are we winning share of wallet? You've just seen it demonstrated here on stage this morning. Why is the beef industry doing that? Because we have programs like Prime Pursuit that is driving higher quality and consistency throughout the supply chain. And the consumer is responding. The only place we get new dollars into our markets, this is really important. The only place we get new dollars into our markets is through the consumer. And they get a chance to vote every day. So let's keep that in mind. So you look at this data in here. This is the quality audits. This is the annual or the every 4-year quality audits that have been done since the beef checkoff started. I want you to look at this data. This is your investment. Why are we enjoying what we do have today? I believe it goes back to everything that's on this chart. We didn't have a way to measure where we were in the industry. What have you heard about this morning? PI, Prime Intelligence, data-driven analytics to make decisions. As an industry, we didn't have that. We didn't have that until the checkoff went into place. We could start doing these quality audits across the industry. This is where it changed. Congratulations for making an investment in your industry. You're getting paid for it. You're getting paid for it for these kind of programs. Look where we are. Look over on the left-hand side of this. We were worried about external fat, seam fat, palatability. Yeah, tenderness and marbling, they show up on the deal, but look at the first 3 things. It was all because of the war on fat that this was what was driving the decisions in the industry. We were all worried about fat. We made them lean. We made them too lean. They had no quality in them. Nearly every grocery store in the United States was selling select beef. It wasn't just Walmart, it was nearly everybody. This is where it all started to change. And you look at these meat wagons that we're producing out here today with the quality in them, pretty phenomenal, isn't it? Again, this has happened, most of it, over the course of the last 20 years. Those of you young folks in the room, it's great to see so many young people in the room. I guess I'm getting old enough that everybody's younger than me, Warren. But the bottom line is, when you look and understand what this chart's showing you, we had a 53% drop in beef demand from 1980 to 1998. A 53% drop. Look what's happened in here since then. Again, what I mentioned to you earlier, beef demand was at the second highest level in 37 years in 2024. The only year that was bigger, did everybody remember the pocket full of COVID dollars we got? Coming out of COVID, everybody got a pocket full of COVID dollars, and it created some false demand signals in there. Again, it got a big spike in demand, but this has been a long-term trend since we've improved the quality of these animals. So if you look at this, it's not just been domestic, it's also been in the export markets. The value of beef and beef byproduct exports this last year, $440 a head. When we had BSE back in 2003, those were some dark days. It was $175 a head. $440 a head this last year. It's not just the domestic consumer that loves our quality beef. It's that global consumer as well. Now, if you go back and you look at these expenditure numbers, this tells the whole story. Look at the growth that we've seen in expenditures in total. They've doubled, haven't they? You look at the chart in here, we were sitting in here at about $125 billion in spending. Look where we're at today. Double that. Look at all the growth. The beef industry has won the war on spending. Even though we only have 27% share of stomach, over 50%. Look at the growth in beef spending from 2000 to 2024. It's $107 billion, roll pork and poultry together. They're $91 billion. Congratulations. Y'all have been a big, big part of that. You've been a big, big part of that. Now, when we look at what's happening in this industry, and you see the increase in the choice and prime. Bob made the comment this morning, I believe the percentage was 97.6, basically 98% of the animals that come through your system are choice and prime. Industry-wide, look where the number is. It's improved, but look how much better you are than the industry. That's because it's intentional. It's very focused. But this has been a tremendous change in here in the industry as we look at it. I did a carcass count for you so you could see the number of carcasses, not just the percentages. Find the blue line right in the middle of that chart. That's the number of select carcasses that we're producing in the industry from 2005 to now. We had over 10 million carcasses that were graded select back in here. That hadn't been very long ago, 2005. Look where it is today. It's 3 million. Find the red line on that chart. It's prime. It's nearly 3 million. It's gone from 1 million to 3 million. Why do you think we have beef demand at these kind of strong levels? Look at upper two-thirds choice on the green line here. This is what the consumer's responding to, is that higher quality product. It tastes better. It's more consistent, and they're willing to pay for it. So if we take this data and you look at the changes here over time, if you focus on this, go down here to the million head. Look at the choice and prime. From where we were in 2004, we were at 14.9 million head. We've seen a 6 million head increase in choice and prime carcasses from 2004 to what we just finished here in 2024. The upper two-thirds choice and prime, up 4.4 million head. We now have a high choice and prime market that you can actually build a market around. You can actually build a program around that because of the overall size of that marketplace. Tremendous change in our markets. Tremendous change, and again, so much of the reason why we're enjoying the markets that we are today, it's demand, it's not supply. So if you go back and you look at demand growth, we can measure this very clearly. And the thing I want to say to you, not only in our domestic marketplace, but in our global marketplace, keep this in mind. Beef is not beef. It's a differentiated product. The U.S. doesn't compete with product from Brazil. Yeah, Brazil creates some lean beef, but our product is grain-fed, high-quality beef. They're not a major competitor for us. They're not a major competitor. You look at this choice grade and the prime grade, all of the growth in demand has been in that area. If you look at the red line on this chart, that's select. How much has select demand increased from the demand low in 1998? 2 or 3%. And you've seen this last year, if that data point in 2024, we just finalized it yesterday, we're up 178%. We're up 78% demand growth, choice and higher beef. Isn't that incredible? Enough said, isn't it? Enough said. Again, we have to be focused on what it is we're producing and the decisions that we're making all the way through the market. And the market will reward us. We're seeing this separation take place when we look at our grids and our marketing. We've had a 40% choice increase in prime and choice production. Look at these grid premiums. Again, take that little spike out there. That's what I call the COVID spike in there when we had some fake demand built in here with $3. We have basically been able to maintain a $40 a hundred premium all the way through this marketplace year in and year out, even with that 40% increase in prime and choice. That's what drives profitability. Now, if you look at it regionally, do we still have opportunity? There's still some huge opportunities. Look at the change in grade that we've seen here over the last 20 years by region. Let's just move over to the far right-hand side for time purposes. Look where we are for the percent of our cattle that are grade and choice and prime in Texas at 71%, Kansas at 83%, and Nebraska at 86%. We have opportunity in all those, but we have a tremendous amount of opportunity in Texas, don't we? To improve our overall supply within that region. And again, I think this is a challenge. I think this is a challenge for each and every one of us to evaluate where we are within our groupings across these regions. Now, our markets will pay significant premiums. We always talk about, I just shared with you, hey, we're selling cattle at $2 to $2.03 today across the various regions of the country. I'm going to remind you that 70% of the cattle in our markets today sell on some sort of a grid or value-based marketing basis. Just for these cattle that are grading, if you follow the green area up there, those are cattle that are grading over 80% choice. We quantify these numbers every week. This doesn't take into account all the primes. This is just cattle grading over 80% choice. Look at those grid premiums. $80 to $110, $80 to $120 a head. If I look at it and roll this data up on an annual basis, this last year it was $81 a head. $81 a head. That's grid premiums over and above what the average cash market would have been across each of these regions of the country. Some areas, obviously Nebraska, the premiums are bigger than that. Texas, they're not as big because of what I just showed you from the overall supply standpoint. But I think this is part of what's changed in here. We have ways to communicate this all the way back through our industry. Cow-calf producers are profitable, but there's still a lot of variability in the profitability at these operations. We went through and we separated and we analyzed all the data across these video auctions this year. And we looked at what were the major attributes that were discounted and paying premiums for. And obviously, weaned, preconditioned cattle with primarily Angus genetics, that's what the market was willing to pay more for. Horns, those kind of things, that's where the discounts were. I think that stands to reason for each and every one of you in the room. Now, this is a further dig down for it. Again, think about where you were. This is every week video auctions from mid-June to the 1st of October. I wanted to know what is the full price range on these cattle every week as we came through there. From the best ones and the worst ones across there, this does not include cattle in the southeast region. Northern Plains, Southern Plains, and West. Look at the price spread. $56 a hundred. Warren, $56 a hundred difference in the value of those cattle all the way across there. Do you want to be a commodity breeder, producer, or you want to be part of a system? It's $300 a head. It's $300 a head. Look at it on feeder cattle. This is on an 8 to 9 weight steer, same data, $34 a hundred, basically $300 a head. That's how much separation takes place in this market. We talk about averages, but this is really how business is being done. And I think this is really important for us as we think about where this market is over time. I'm going to finish with this because I think this is really important for all of us. Look where we are. Look where we were back in the 80s and 90s. There was no profitability in this business. And then we made the transition, started to get focused, and where our average profitability's been over the last decade. Again, you're looking at numbers over here that we're going to have, when you roll all these segments together, $700, $800, $900 a head margin across these segments to pay the bills. Something we've all waited for a lifetime, and you all are moving that needle. So congratulations to each and every one of you. I wish you the continued success. Appreciate the opportunity to be a part of the program, and again, thank you very much. I hope you have a good rest of your meeting. Thank you.